All right, let's get straight into Gilead's latest numbers. On one hand, you've got a massive earnings beat. On the other, their future growth engine is sputtering. The big question is, which story is the market going to buy? We're going to break it all down right now.
So here's the number everyone's talking about, a 22% pop in non-GAAP EPS year over year. Looks great, right? But look, as investors, we know the headline number is almost never the real story. You've got to dig deeper. And this is the core of it, right here. You've got two completely different stories inside one company. The HIV business is just a fortress, an absolute cash cow. But then you look at cell therapy, and that's where the alarm bells are going off. So where's the real value here? That's what we need to figure out.
Okay, let's start with the top-line numbers for the quarter. Total revenue came in at $7.8 billion, up 3%. But honestly, the number I'm focused on, the one you should be focused on, is product sales without Victarvy. We all knew the COVID revenue was fading, so you strip that out and you see the core business grew a healthy 4% to $7.1 billion. That's a much cleaner signal. So where's that 4% growth coming from? Well, let's talk about the bull case. And really, it's a one-word story: HIV. This is the engine room of the whole company, funding literally everything else they do. You can see it plain as day right here. HIV sales are up 4% to $5.3 billion. That's huge. Now look at Oncology. That's where cell therapy lives. It's actually down 3%. It's a tale of two completely different businesses. And if we zoom in on HIV, it's all about their blockbusters. Victarvy, their main drug, grew another 6% to a staggering $3.7 billion for a single quarter. And then you have Descovy, which just exploded, up 20%. This isn't just growth, this is market dominance. Okay, that's the good news. Now for the other side of the coin, the bear case. And this is where things get a lot more complicated for the stock.
And here's the chart that has the bears worried. The Veklury dropping 60%, no one's surprised by that. We all saw it coming. The real problem is cell therapy, down 11%. The company blames competitive headwinds, which is Wall Street speak for, we're getting beat. And that was supposed to be the future. And this isn't just a blip on the radar. Management had to come out and guide down for the full year. They're now forecasting a 10% drop for the entire cell therapy business in 2025. That tells you these competitive pressures are real, and they're not going away anytime soon. So, putting it all together, what's the official outlook from the company? What are they telling Wall Street? Now here's the twist. Despite all the trouble in cell therapy, they actually raised the low end of their full-year guidance for both sales and EPS. What does that tell you? It says the HIV business is such a monster that it can paper over the cracks elsewhere, at least for now. And to really hammer home the stability point, the CEO made sure to talk about this. They locked in a patent settlement for Victarvy. What this means is no generic competition until 2036. Think about that. They've secured their biggest moneymaker for more than a decade. That's an incredibly long runway to figure out their next move. So this is the whole investment thesis in a nutshell. The core business, it's a fortress with a huge moat, and that moat is now protected until 2036. But can they use that time and all that cash to build a new growth engine? Can they fix the problems at Oncology and actually compete? Because that's what's going to decide if this stock goes higher or just treads water for the next decade. That is the fundamental question you have to answer.